Hello and welcome to another YouTube session with my solo 401k financial. We're getting started here momentarily. Thank you for your patience. If you're on YouTube, please like and subscribe. If you have questions, please go ahead and chat those up. We're going to go through the slides first, but then we can go through the questions thereafter. One second here. Thank you so much for joining. It's a timely topic, talking about the announcement this week that Vanguard is going to be exiting the solo 401k business, selling the accounts to Ascensus. And so we want to start to talk about that as far as what the options would be if you were an existing Vanguard account holder, based on the information that's out there. And of course, all the information that we already have, since we've always historically had lots of clients that have come from Vanguard or Ascensus to our plan to take advantage of the service and features of our plan. So we're also going to share another screen here. Again, if you're on YouTube, please like and subscribe for more videos like this. Please feel free to chat over questions, and we'll go through all the questions at the end. We've got plenty of time for questions. But I think a lot of these slides are going to address the questions. So let's see here. All right. So let's get going. So the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So we just want to highlight quickly that we have these regular webinars here on the YouTube channel. So if you subscribe, you get notification, you get access to all the recordings. For example, we're in the middle of a series of webinars regarding how much income you would need to maximize contributions. Some might think of it as the magic number. Last week, for example, we did one regarding an S Corp and C Corp scenario. The next one in the docket is one for sole proprietorships or single member LLCs. So the goal would be to do that early next week. So please subscribe so you get all the notifications. With the Vanguard announcement this week, there's been so many questions about it. We wanted to just switch the order, but that one's in the hopper, and we'll be ready to publish that next week. So please, again, subscribe for all the notifications. And we'll be talking about partnerships, multi-member LLCs. Previous to that, we had done a whole series of deep dive webinars regarding all the contribution rules for 2023/2024 for all the different scenarios that our clients are typically in. Beyond that, we've got some other good content coming up, for example, regarding solo 401k loans, deep diving that topic, deep diving the solo 401k establishment process. So we like to bring a lot of this good prepared content to the YouTube channel, but then always during the week, you can find us on our community, mysolo401k.net/my community, as we have daily webinars on there, mysolo401k.net/my community. So for today, we want to focus on the announcement that Vanguard's going to be exiting the solo 401k business, selling to Ascensus. And so what are the options if you're an existing Vanguard individual K or solo 401k account holder? Why would someone switch to my solo 401k? We want to talk about different scenarios to really illustrate some of those top considerations that we're hearing from our clients. We want to talk about the process A to Z, and then, of course, highlight some resources. So this is where you can see, again, we have our daily Zoom on our community. It's always free to join. All are welcome. It's like an office hours Q&A style where folks are bringing questions. So it's a great way to just bring your own question or just hear what other people are asking about. It's a great way to learn. So we also have forums on there. We have a library of hundreds of videos and webinars. So there's tons of great content. So yes, Vanguard exits the solo 401k business and sells to Ascensus. So if you look at what's been published by Vanguard in their press release on their website, you can start to get a picture of what the options are going to be. So, of course, top considerations are always going to be costs, investment options, the features, right? Like the reason that the individual might have had a Vanguard, a Solo 401k to begin with. And so if an existing Vanguard individual Solo 401k account holder doesn't do anything, the account is going to be transitioned to Ascensus. They have an individual K option. And so um, looking at what's been published by Ascensus on their page specifically for those, Vanguard account individual Solo 401k account holders, it's clear that there are many features that are not available under the Ascensus individual K plan as compared to the Solo 401k plan offered by my Solo 401k Financial. So number one would be the ability to make mega backdoor Roth Solo 401k contributions. So the way that you do that is by making voluntary after-tax Solo 401k contributions and then either transferring those to a Roth Solo 401k or Roth IRA. So you have to have a plan that allows for those, number one, voluntary after-tax Solo 401k contributions, as well as the subsequent transfer to either a Roth Solo 401k or Roth IRA. And not only do you have to have a plan document that allows for it, of course, it's going to make sense to work with a provider like us that has experience in guiding clients through all the technical requirements, that handles all the ongoing compliance support that goes along with making mega backdoor Roth Solo 401k contributions, like the required 1099-R. So if that's something that someone wants to do, they're not going to be able to do it through the Ascensus individual K plan because it doesn't allow for after-tax contributions, which is the first step in making mega backdoor Roth Solo 401k contributions. Whereas, of course, the plan that we offer does. Number two on the list here would be investment options. So if you look at the page that's on Ascensus's website for existing Vanguard clients, they list a certain number of Vanguard mutual funds. And that's the extent of the options based on the information that's on their website, right? Whereas with our clients, we help our clients open up accounts at the bank or brokerage of choice. So we have clients that have accounts at hundreds of different banks, many different brokerages, such as Fidelity, such as Schwab, where you're going to have a wide range of not only brokerage type investments, it could be stocks, bonds, mutual funds, right? The same wide range of investments that you would have through an IRA. But on top of that, because our plan allows for it, the individuals, the Solo 401k, our Solo 401k clients can also invest in alternative investments like real estate, notes, crypto, etc. So that would be a big difference that's important to a lot of clients. The third option or the third feature on the list is Solo 401k loans. So again, it's clear based on the published information that Ascensus's individual 401k plan doesn't allow for Solo 401k loans, where of course our plan offered by my Solo 401k Financial does allow for Solo 401k loans. This is where you can literally borrow money from your own 401k account. You're able to borrow up to 50% of the balance, not to exceed $50,000. We prepare the required loan documents as part of our service for no additional charge. So our plan certainly supports that. We handle all the ongoing compliance support that goes along with it, and the Ascensus individual K plan doesn't. The fourth item listed on our chart here is the annual fee. So again, it's clear based on the published information that Ascensus, for their individual K clients, for those that come over from Vanguard, the fees are going to be, it's not going to be flat, right? It's going to be $20 per participant. So let's say you have a husband and wife that are both working in the same business, both participating in the same Solo 401k plan. That'd be two participants. And then remember I said that you're limited to certain Vanguard mutual funds. Well, for each mutual fund that the Solo 401k account holder invests in, they'll be charged $20 per mutual fund. And that's over an annual time frame, so per year. Whereas with our plan, we have a flat annual fee. So the initial 12 months is included in our setup cost, our establishment cost. On the anniversary date, we charge an annual fee. So if someone signs up here in April of 2024, the first annual fee would be due in April of 2025 and cover the following 12 months. And it's totally flat. It's $125, regardless of whether it's one participant or two participants, regardless of what the individual is invested in, regardless of the type of ongoing support that they need, right? Whether it's loans, a 5500 EZ, etc. So it's totally flat. Next item on the list, again, alternative investments. Like I mentioned, with the Ascensus individual K plan that Vanguard account holders will be transitioned to, it's going to be limited to certain Vanguard mutual funds. Whereas our plan does allow for not only those open architecture brokerage type investments, but also alternative investments like real estate, like notes, like crypto, etc. Next item on the list, compliance support. So it's clear based on the published information on Ascensus's website, on their dedicated webpage for existing Vanguard account holders to educate them on the transition, that Ascensus doesn't prepare the 5500 EZ. They're not going to, of course, handle the 1099R, right? Whereas with our plan, we provide all that ongoing compliance support for no additional charge. So for example, the 5500 EZ would be needed once the value of the plan exceeds $250,000, right? We handle that as an optional free service. We prepare it and file it under the electronic filing system. Same with the 1099R. A 1099R would be needed, for example, if you were making those mega backdoor Roth Solo 401k contributions, because when you move the money from the after-tax Solo 401k account to either a Roth Solo 401k or Roth IRA, that's a reportable event. A 1099R has to be issued. We handle that for no additional charge for our customers. Next item would be the $1,500 Solo 401k tax credit. So our plan makes the individual or the self-employed business that sets up the plan eligible to claim a $1,500 Solo 401k tax credit, right? It includes the automatic participation feature. It includes all the required notices and forms so that the self-employed individual or their business can claim the tax credit. Whereas the individual K plan that Vanguard account holders will be transitioned to is not going to be eligible for the tax credit. It doesn't include the required feature or notices, etc. So, and then lastly on the list, again, just to highlight, with the Ascensus individual K plan that the Vanguard account holders will be transitioned to if they don't do anything, it's going to go to an Ascensus account, right? Whereas with our plan, right, we're totally neutral on where our account holders are at, but we're very hands-on in helping them open up accounts at the bank or brokerage of choice. So we have clients that have opened up accounts at hundreds of different banks, brokerages. They have accounts at cryptocurrency exchanges, et cetera, et cetera. So hopefully this is a good chart to start to introduce the topics for those so you can consider. So one of the big issues that we hear about is the tax credit. So let's first start to dive into that. So to introduce that, if you haven't heard about it, right, under the Secure Act, Congress authorized a number of different tax credits to encourage small businesses to offer a 401k plan. And there are different tax credits. So not all of those tax credits would be available to a self-employed person or business that sets up a one participant solo 401k plan. So for example, the startup cost credit is going to be limited to businesses that have non-owner employees. And so someone that has a solo 401k needs to be an owner-only business. So they're not going to have any non-owner employees. So automatically, they're not going to be eligible for the startup cost credit. But another different credit that was authorized under the Act is the automatic participation credit. So a plan that includes the automatic participation credit is going to be eligible for a $1,500 tax credit. And under the rules, under the guidance from the IRS, under the form that's used to claim the credit, it's clear that that business doesn't need to have any non-owner employees. So that means that an owner-only business that sets up a solo 401k plan that includes the automatic participation feature, along with all the other notices that are needed to comply, would be eligible for the $1,500 tax credit. So that's a $500 per year over 3 consecutive years for a total of $1,500. This could be, of course, for new plans, but or it could be for existing plans. So if someone has an existing solo 401k at Vanguard and then they convert it to our plan, we're automatically going to include the feature and all the required notices so that that business would be eligible to start claiming the credit. And unlike the startup cost credit, which is based on the costs, the $1,500 solo 401k automatic participation tax credit is not limited to the costs. So even though our costs are less than $1,500, the individual is going to be able to claim the full $1,500 in tax credits. So let's focus on the existing solo 401k, right? Because if you're an existing Vanguard solo 401k account holder, you convert here in 2024 to our plan, that would make the individual eligible to start claiming that $500 per year credit when they file their 2024 taxes next year. Has a tremendous impact on the cost. Remember, it's not limited to the cost. So for example, we charge $650, which includes the $525 establishment fee plus the first $125 annual fee. Then on the anniversary date, so 12 months later, we would charge a $125 annual fee to cover the second year. So in the first year, after you net out the tax credit, the net cost for the first year is $150. But in the second and third years, the value of the credit of $500 per year greatly exceeds the cost, because the cost is only $125, but the credit is $375 more, $500. And this is a tax credit, not a tax deduction. So with a tax deduction, the self-employed person or the individual that's claiming the credit is reducing their income upon which their tax liability is calculated. Whereas with a tax credit, you first determine your tax liability, and then you're able to reduce that tax liability dollar for dollar by the value of the tax credit. So in that way, it's much more advantageous as compared to a tax deduction. So again, you just have to be eligible to have a plan, right? So that means you're self-employed, you don't have any employees working for you, or at least no full-time, non-owner, non-spouse W-2 employees. And you set up a plan like our plan that includes the automatic contribution feature. So what is the automatic contribution feature? Well, it sets a default 3% contribution percentage, but the employee, meaning the solo 401k owner, has the option of opting out of the default amount. And that doesn't mean that they lose the credit, right? That doesn't mean that they can't contribute, right? That just means that they're not going to contribute according to the default automatic 3% contribution amount. So they can contribute more, they can contribute less, they can contribute in whichever schedule or interval they prefer. Because with a self-employed person, you don't have to necessarily contribute every paycheck, right? Or every pay period. You have actually until your business tax return deadline, including any timely filed extension, to make contributions. So we have many individuals, for example, that are making 2023 contributions now in 2024 because they filed an extension and because they set up the plan before the end of last year, et cetera. So you have tremendous flexibility in terms of the schedule in which you make contributions. And that makes sense because many self-employed individuals don't make their income on a regular schedule, right? It could go up and down, could be seasonal. They may not know exactly how much they made and how much they want to contribute until after the end of the year. And so the rules accommodate that reality, right? And so by opting out of the default amount, now the self-employed person preserves all the flexibility to make contributions of whichever amount or schedule they prefer, of course, within the limits and the deadlines. As a matter of fact, you could choose to not make contributions, and that person would still be eligible for the credit because they have the automatic contribution feature in the plan. They got the required notices and forms, et cetera. So again, certainly if you have an existing plan like at Vanguard, can be upgraded to our plan so the individual can claim the credit. So that, of course, begs the question, okay, how do I claim the credit? Well, there's a Form 8881, was actually updated by the IRS at the end of last year, which is when we rolled out the plan to our plan to be eligible to claim the credit. We were the first provider to do it. And so we have tremendous content. We have a deep dive walkthrough for all the different variations, right? All the different scenarios, right? The scenario is going to be slightly different, whether your self-employed business is taxed as an S corp versus a sole proprietorship. And we share all that content with our clients, so you know exactly what you need to do to be able to claim the credit, exactly how you have to fill out the form and all the other related forms that would flow from this Form 8881. But that's the first form that's filed in order to be able to claim the credit. But just we put that walkthrough together to make it easy for our clients to be able to reap the benefits of the tax credit. So just a couple quick examples to illustrate. Let's assume Lindsay is self-employed. She already has a solo 401k plan, could be a Vanguard. If she amends her plan to add an automatic contribution feature here in 2024, then she would be able to claim the $500 credit when she files her 2024 taxes. And then again for 2 more years in 2025 and 2026, as long as she continues to maintain the plan with the automatic contribution feature. Whereas Brad, he doesn't have a solo 401k plan, but he's eligible to set up a plan because he doesn't have any full-time employees working for him. So if he signs up for a plan in 2024, that would make him eligible to claim the $500 credit when he files his 2024 taxes. And then again, for 2 more years, as long as he maintains the plan with the automatic contribution feature. So now let's look at different scenarios that may be relevant to the different Vanguard account holders out there. So again, let's start out with the frugal investor scenario. So if no action is taken, the existing Vanguard Solo 401k accounts will be transitioned to Ascensus individual 401k plans and subject to the following fees: $20 per participant, $20 per mutual fund, and that's on an annual basis. Whereas including the tax credit, the net cost to set up and maintain a solo 401k with my solo 401k financial is actually $0 over the first 7 years, because that $1,500 tax credit is going to more than cover the cost to set up and maintain the plan with us over the first 7 years. So we have 2 scenarios on the chart. Let's assume that you have one person that's investing in 3 mutual funds over 7 years. So based on the fee schedule that's published on Ascensus' website for existing Vanguard account holders, that person would end up spending $560 to maintain that plan over a 7-year period, with those fees being paid with retirement funds, so depleting their retirement account. Whereas the net cost to set up and maintain a plan over the same period with my solo 401k financial is going to be $0 after factoring in the $1,500 tax credit. Let's look at a different scenario. Let's assume 2 participants, right? It could be a husband and wife, both working in the same business, right? Let's assume they're realtors, right? And they're both participating in the same solo 401k that's been transitioned to Ascensus. Let's assume that each person is invested in 3 different mutual funds, again, over that 7-year period. So in that scenario, those 2 individuals are going to incur fees amounting to $1,120 over that 7-year period, again, depleting their retirement accounts. Whereas with my solo 401k financial, the net cost is going to be $0 after you factor in the $1,500 tax credit. So you can see the impact is tremendous in terms of cost. Let's look at another scenario. Let's assume let's call it the Roth maximizer. So someone who's really focused on making Roth contributions. So if no action is taken, existing Vanguard Solo 401k account holders will be transitioned to Ascensus individual 401k plans, which don't allow for Roth employer contributions, don't allow for mega backdoor Roth solo 401k contributions. Whereas with the solo 401k from my solo 401k financial, our clients can make both employer contributions as Roth solo 401k contributions, as well as voluntary after-tax solo 401k contributions, which is how you make mega backdoor Roth solo 401k contributions. So ultimately, these individuals are going to be able to contribute, for example, up to $69,000 or even $76,500 if they're 50 or older for 2024 as a Roth or mega backdoor Roth solo 401k contributions. And then, as I mentioned, on top of that, we handle all the 1099-R reporting as an optional free service for our clients that goes along with making either Roth employer contributions or mega backdoor Roth solo 401k contributions. Whereas Ascensus wouldn't, based on the published information on their website. So now let's go to a third scenario. Let's assume it's a large account holder. So again, if this individual has a solo 401k at Vanguard, an individual 401k at Vanguard, and takes no action, their account is going to be transitioned to Ascensus, to the individual K plan at Ascensus, where they're published information on their website for those existing Vanguard account holders makes clear that Ascensus is not going to handle the Form 5500EZ, which is required once the value of the plan exceeds $250,000, right? So once the value of the plan exceeds $250,000, looking at all the different accounts, right? It could be pre-tax and Roth, could be multiple participants, like say a husband and wife. Once the value exceeds $250,000, that's going to trigger a tax filing, what they call a Form 5500EZ, an informational tax filing that gets filed with the IRS. So for our clients, we handle that Form 5500EZ preparation and filing. We do it under the electronic filing system, eFast, to make it very convenient for our clients. And that's all as an optional free service. In other words, no additional charge. So that could be important if you're a large account holder. Let's look at a different scenario, the alternative investor. So in other words, someone that is interested in investing in alternative investments or even a broader range of brokerage type investments. Because if this individual has a Vanguard Solo 401k account and takes no action, their account is going to be transitioned to Ascensus, which is going to limit the investment options to certain mutual funds at Vanguard. So that means no non-Vanguard mutual funds, no stocks, no bonds, no certificate of deposit. Whereas with our clients, we help our clients open up accounts at the bank or brokerage of choice, right? Hundreds of different banks, many different brokerages like Fidelity, like Schwab. These are free brokerage accounts, right? Free meaning there's free online trading. There's no setup fee. There's no maintenance fee. The investment options are going to be very wide, right? It's going to be similar to an IRA. It could be stocks, could be bonds, right? It could be ETFs, right? Not just Vanguard mutual funds. In addition, we help our clients open up bank accounts. That could be instrumental for those that are looking to invest in alternative investments like real estate, private placement, private stock, crypto, precious metals, notes. So having that bank account gives those clients checkbook control, right? They can also ACH money out of the account, right? It gives them access to certified bank checks, things that are instrumental for those clients based on experience, based on their feedback, because they can act quickly to take advantage of investment opportunities. So finally, we've got the rainy day investor. So if this individual has a Vanguard individual K account and takes no action, it's going to be transitioned to the Ascensus individual 401k plan, which doesn't allow for solo 401k participant loans. Again, based on information published on Ascensus's website, specifically for existing Vanguard account holders to let them know about the transition. No 401k loans are allowed. Whereas with the solo 401k offered by my solo 401k Financial, our plan does allow for solo 401k participant loans. On top of that, we prepare all the required documents that are needed to comply. So when you take a solo 401k loan, you're literally taking money from your own solo 401k account, but it's not going to be considered a taxable distribution as long as it's properly documented as a loan. So the terms of that loan are the person, and this applies per participant. So if you have multiple participants in a solo 401k, each person can take their own loan. So they're going to be able to borrow up to 50% of the balance, not to exceed $50,000. It's going to have to be paid back in monthly or quarterly payments, equal payments of principal and interest. The interest is either going to be prime plus 1%, or it could be a CD rate plus 2%, with those payments spread out over a 5-year term. And it has to be documented, right? We prepare the required loan documents within 1 business day when someone wants to take a loan, and there's no additional charge for that. So for that rainy day investor, they may want to consider switching to a plan like ours that does allow for solo 401k loans. So now let's talk about the process to convert a Vanguard individual 401k to a plan with my solo 401k. So we're going to look at this under a couple different screens here. 1 second. Okay. So we're going to look at it on these slides, and we're going to also look at some good images just to really emphasize it. So just to kind of start to introduce the topic, right? It's very common that we have clients already today that have a solo 401k, a basic plan somewhere else. It could be a Vanguard, could be at Ascensus, could be a Schwab or Fidelity, and they want to upgrade to our plan to take advantage of the service and features that we offer, like all the service and features that we've been discussing. So when that happens, that's called a restatement. So I think of it as a cut and paste, right? And I think it's helpful to understand that a solo 401k is really a legal entity. It's a trust because the assets are held in trust for the benefit of the solo 401k owner when they're retired, right? So it's not a personal asset that they could use at any time now without restriction. It's not a business asset of their business. So as a trust, it's a legal entity, which means it's the documents that create it. So when someone has a Vanguard Solo 401k plan, what they really have is they have documents from Vanguard that create the Solo 401k, and then they also have their account at Vanguard. So when someone restates their plan from Vanguard to us, we're really cutting out those Vanguard documents and replacing them with our Solo 401k documents that allows the individual to achieve their objectives, right? Whether it's being able to make mega backdoor Roth contributions or invest in alternative investments. All right, so hopefully we didn't lose audio here. I don't see the video, but we don't need the video, but hopefully we didn't lose audio. We'll give it 1 second here. Thank you so much for your patience. Try to test it myself. Okay. Hopefully. Okay. Thank you so much for the patience. Let's assume that I'm gonna assume that we can hear it now. So I was just explaining the process of, oh, wonderful. Thank you so much for the feedback. I was explaining the process of converting from a solo 401k at Vanguard to a solo 401k with us, that it's a cut and paste, or meaning cut out the Vanguard documents and replace them with our documents. So in order to accomplish that, we need to draft the solo 401k documents, not as a new plan, but as a restated plan. So that means we need to know, okay, when was the original Vanguard plan created? What was that original effective date? So we can relate back to that original effective date. And then we use that to draft the documents. Now, Vanguard is not obtaining an EIN for the 401k, but an EIN is needed for the 401k. This is the way that we've always done it. This is the IRS expectation. So for that, we obtain an EIN specifically for the 401k. So not for the business, right? But for the plan as part of that restatement process. New accounts will need to be created at the bank or brokerage of choice. So we're asking clients, okay, where do you want to have the new accounts at, right? Do you want to have them at Schwab? Do you want to have them at Fidelity? Do you want bank and brokerage accounts? And then based on their answer, we prepare the paperwork that's needed to open the requisite number of accounts. Could be pre-tax, Roth, and after-tax if the person wants to make mega backdoor Roth contributions, or it could be a set of 6, right? Pre-tax, Roth, and after-tax if it's 2 participants, like 2 spouses, and each person wants to make mega backdoor Roth contributions. We prepare the paperwork to transfer the cash and assets over from the pre-existing accounts at Vanguard to the new accounts for the restated plan. And because the plan is not really terminating and a new plan is being set up, but instead it's being restated because it's the same plan is continuing, a final Form 5500 is not needed, right? Because the existing plan of Vanguard is not being shut down. Instead, a new plan is being created, right? That also means that it's not reportable on a 1099-R, because really the cash and assets are just going from one account for the solo 401k to a new account for the restated plan. Okay, so yep. Okay, wonderful. So additional considerations would be if the value of the plan exceeds $250,000, have you been filing Form 5500EZ? So in our experience, sometimes we find when folks are restating from a different provider to our plan that they may not have been aware of the 5500EZ filing requirement. And so fortunately, there is a process to file under the late filing program to the IRS to minimize fees as much as possible. So the plan would need to be caught up in terms of 5500EZ filings, right? We'll handle it going forward, but we want it to be caught up once it comes onto our platform so we can handle it going forward, right? Do you wish to keep investments? If yes, then it'll need to be an in-kind transfer, which of course we can accommodate and guide the clients through the process, right? Are you looking to make those mega backdoor Roth contributions or Roth contributions, right? Again, we ask about all that as part of the onboarding process so we can prepare the paperwork, to open the requisite number of accounts. So, and then again, just to continue to highlight, right? I mean, all the reasons that folks would sign up is because of all the compliance support, the features, etc. As I mentioned, I wanted to take a look at a visual on our website real quick because it helps to illustrate the process, right? Because the process is important. So let's take a quick look at a visual we've got. So the steps would be completing our online application, right? My solo401k.net. You can just click on open account. It'll take you to Solo, and then click on Solo 401k. It'll take you to the application. It's just 10 simple questions that we need answers to in order to be able to draft the documents. Once the application has been submitted, payment is made, then we prepare the documents to restate the plan same day, right? You can pay with a credit card or a debit card. It's all right there on our secure payment portal from that application page. As I mentioned, we prepare the documents same day. We send out an email with a link to our secure portal where the client can download from our secure portal. From that same email, then they can upload the signature pages. And then from that same email, that was sent out same day, giving them access to the restated plan documents, they can go to a page on our website and let us know, okay, where do they want the new accounts at, right? It's a quick 1-minute questionnaire. So once we get those signature pages back, we get the response back on where they want the new accounts at. That'll prompt us to prepare all the paperwork that's needed, right, to open up the accounts at the bank or brokerage of choice. So if they choose Schwab, to take a simple example, we would pre-fill the paperwork that Schwab requires to open up the free brokerage accounts at Schwab. Similar process where an email goes out, the client can access the pre-filled documents. They just download, sign, upload. Then we review and compile and fax to Schwab's back office. Then the client gets an email once the account is opened up at Schwab. And then in the meantime, we're guiding them through the process to transfer the cash and assets over from those existing accounts at Vanguard. So, and then again, as part of the process of, preparing the brokerage forms, we're also obtaining the EIN that's needed for the solo 401k, right? And this is the way that we've always done it. This is the IRS expectation, right? And that makes sense because to the extent that there's any income reported with respect to that EIN, now the IRS is going to know that that income is growing on a tax deferred basis inside of a 401k. So let's take a simple example. Let's assume that someone wants to invest in a certificate of deposit. So we help them open up an account at a bank, could be a local bank or credit union, for example, where they invest in a certificate of deposit using their solo 401k funds. So of course, the bank is going to issue a 1099 INT to report the interest income earned on that investment. And the bank is going to report that 1099 INT using the EIN that was used to open the account. So if the individual had used their business tax identification number or their personal social security number, now the IRS would expect for that interest income to be reported on their business tax return or their personal tax return. Whereas if the individual opens up the bank account under the EIN that we obtained for the solo 401k, now the IRS, when they receive that 1099 INT issued with respect to that same EIN for the solo 401k, will understand that the interest is growing in a 401k on a tax deferred basis. And then, yes, as we mentioned here at the bottom of the slide, Vanguard has their own transfer forms to transfer assets from the solo 401k to the new accounts for the restated plan. And so that those forms are going to communicate to Vanguard that the plan is not being shut down, right? The individual is not taking a taxable distribution, so that Vanguard can properly handle the transfer, right? They don't even need to issue a 1099-R. So we like to be involved and pre-fill that transfer paperwork just to ensure that Vanguard is understanding things correctly, right? They're not misunderstanding this as, say, a taxable distribution and then reporting it as taxable incorrectly. So hopefully that helps. Let's go back to the slides. And then I want to get to all the good questions. Thank you so much for all the good participation. We appreciate that. Okay, yeah, so that takes us to the end of the slides. Just again to highlight the resources. You can always join us on our community, mysolo401k.net/my community, where we have daily webinars, 1 p.m. Pacific, 4 p.m. Eastern, daily Zooms, Q&A, right? People bring questions. So it's a great way to learn, to ask your own questions. It's always free to join. All are welcome. We also have forums on there where people can post questions 24/7. We have a forum that's already started out on this topic as far as options and considerations if you are an existing Vanguard Solo 401k account holder. And then, of course, we have our library of videos and webinars. We got hundreds of videos and webinars on there. So it's a great way to learn and to share the knowledge. You can also subscribe to the YouTube channel. We're going to be back. The goal is early next week to continue the conversation as far as how much income you would need in order to be able to maximize solo 401k contributions. We want to continue with that series. And then we anticipate continuing to touch on this topic, right? As far as options for Vanguard Solo 401k account holders. But in the meantime, let's start to go to the questions. I appreciate you bringing the good questions. Thank you so much. So which Solo 401k account I should contribute for 2023 taxes? Pre, post-tax, or Roth 401k? I contributed $13,000 through a day job in 2023. Well, it depends on what the individual wants to do. It depends on what your plan allows, right? If you have a solo 401k through my solo 401k financial, then of course our plan allows for pre-tax contributions, which could be either employee or employer. It allows for Roth contributions, which could be either now employee or employer, thanks to Secure Act 2.0. Could be post-tax, or what they call voluntary after-tax contributions. And then other considerations would be, okay, when did you set up the plan, right? Did you set up the plan, for example, before the end of 2023? And did you file an extension for your 2023 business tax return? If yes to both questions, now the individual would have until their extended tax return deadline to make all types of contributions. And then other considerations would be, okay, well, what's your self-employment income, right? Because your ability to contribute to the plan is based on your self-employment compensation. It's also based on what type of contribution you're looking to make. Did you make contributions to another plan like a day job plan? So if you go to our YouTube channel, for example, we've done a series of deep dive webinars on there. It's broken down by how the business is taxed. You can also go to our website, mysolo401k.net. We've got tons of good content there. You can go to our support page, right? Clients are submitting their scenarios through the support page, and we're able to give exact feedback on their scenario in terms of how much they can contribute. So hopefully that at least introduces the topic and some of the considerations. Let me know if you have any follow-up questions. I appreciate you bringing the good questions and participating. Let's go to the next good question here. Vanguard doesn't have a liability to inform us. Well, I would expect that they are going to inform their customers. You know, I'm sure that Ascensus was probably excited to announce the transaction, and Vanguard presumably is in the process of informing their customers. The deal hasn't closed right yet. According to the press releases, it will close in the third quarter of this year. So Vanguard also may just be waiting to perhaps until there's more certainty as far as all the process, et cetera. But please, if you have specific questions on what they say, please come back or please share in our forums, as we love to address it. Because if you have a question about it, I'm sure plenty of others also have a question. How can I get an existing solo 401k restated to qualify for the $500 tax credit? Well, if you have a plan with someone else, it can be restated to our plan. If you're an existing account holder whose plan hasn't been updated to qualify for the tax credit, you can go to our support page, mysolo401k.net/support. That's the fastest way to get your plan in the queue to be updated to be eligible for the tax credit. Thank you so much for bringing a good question. Next question, is it not more advantageous to do employer Roth contributions than backdoor because the employer does not have to pay 1/2 of Social Security Medicare, where if you did Roth backdoor, that would be paid? So that's a good question. So my reaction to that, though, is that your ability to contribute to the plan, right, regardless of whether you're making employee versus employer versus after-tax contributions, is always going to be a function of your self-employment compensation, right? So let's say W-2 wages in the case of a business that's taxed as an S corporation. And so regardless of whether you're making employee versus employer versus after-tax, you have to have the W-2 wages to justify the contribution. And you can't save more than you earned, right? You can't save more than your W-2 wages. In addition to that, one's obligation to pay Social Security and Medicare tax, payroll type taxes, is not reduced by making solo 401k contributions. So the obligation persists. I mean, if you look at the W-2, you've got your ability to contribute to the plan is based on box 1 of the W-2, plus any pre-tax elected deferrals, not in box 1, but over in box 12. But your obligation to pay Social Security taxes, your obligation to pay Medicare taxes is based on different boxes in the W-2. So if you make a solo 401k pre-tax employee contribution, that will reduce box 1, but it's not going to reduce the other boxes upon which your obligation to pay those other taxes is based. So that's just another way of saying making 401k contributions doesn't reduce your obligation. So I'm not sure that it's going to have an impact, but I do appreciate all the participation. A good question. Are there any fees associated with setting up a brokerage account? Can I transfer my 401k in kind? So we help clients open up accounts at the bank or brokerage of choice. The brokerage firms we are helping clients open up accounts do not charge a setup fee, do not charge a maintenance fee, right? And we, of course, charge a fee. But once you factor in the net cost, the net cost after the tax credit, right, over the first 7 years, our fees are 0, right? Because the value of the tax credit is more than our fees. And we're not charging any fees to help clients open up accounts at the bank or brokerage of choice. We're preparing that paperwork as part of our service for no additional charge. Can I transfer my 401k in kind? Most certainly, right? As long as the new account where you want to have the restated solo 401k plan can accommodate that investment. And like I said, I mean, we have many customers that are opening up accounts at Schwab, at Fidelity, right? And these are brokerage accounts that say Schwab that allow for the same type of investments that you would have with an IRA at Schwab, right? So it's going to be very wide, right? Stocks, bonds, mutual funds, ETFs, etc., as opposed to the Ascensus individual K plan, where it's going to be limited to certain Vanguard mutual funds. So it'd just be a matter of whether that specific investment that you want to transfer over in kind, as long as it can be held in that, say, new brokerage account at Schwab or Fidelity or wherever you decide to have the new brokerage account at, as long as it can be held in that same new account, then that'll be fine. And the expectation is that it would be based on everything I just said above. But that would be the specific issue to confirm. How do I request restatement to update an old plan with automatic enrollment to get the credit? And do you have a sample So yes, if you go to mysolo401k.net/support, that's the fastest way to get your plan in the queue to be updated, to be eligible for the credit. And then we would prepare the documents to update the plan, all the required notices, et cetera. And as part of that communication, we're going to link to a deep dive walkthrough where we talk exactly how to complete Form 8881 and all the other related forms, which will depend on how the self-employed business is taxed. I have changed my 401k plan from my Vanguard account to my solo 401k. Thank you so much. What's the next step for those 401k balance left in my Vanguard accounts? Do I need to close the Vanguard account? So if you go to, I'm not sure exactly where you are in the process, but you would receive the documents to restate the plan. You would receive in that email, there's going to be a link to our next steps questionnaire where clients are letting us know where they want to have the new accounts at. And as part of that questionnaire, you can indicate that you want to do a rollover. So you would just simply go in there, complete the questionnaire, indicate that you want to do a rollover, and that would prompt us to reach out to you to guide you through the rollover process. So ultimately, yes, the cash and or assets in the pre-existing Vanguard accounts will need to be transferred to the new accounts for the restated plan. Because from Vanguard's perspective, that account is for a plan provided by Vanguard. And that Vanguard plan has been cut out and replaced with our plan. So the cash and assets do ultimately need to be transferred to the new accounts for the restated plan. Thank you so much. I set up in 2024 and filed an extension for 2023. So if you set up in 2024 and you file an extension for 2023, then it would be too late to make employee contributions. But if you filed an extension for your self-employed business tax return, you could at least make employer contributions as well as voluntary after-tax contributions all the way up until the extended tax return deadline for 2023. Hopefully that makes sense. Thank you so much. Example, $100,000 of W-2 income, $25,000 employer Roth non-elective versus backdoor Roth costs $7,600 more paid when considering both. So again, I think we're talking about it in terms of obligation to pay Medicare and Social Security. So that obligation doesn't go down when someone makes 401k contributions. But that's hopefully I'm not misunderstanding your question, and hopefully that's helpful to you. Thank you so much for all the good participation, everyone. We do appreciate it. Please continue to participate. We'll give it another minute or so to see what other questions you have. Please continue to participate. You can participate on our community every day, forums, our webinars. You can follow us on YouTube and get notifications of all our upcoming webinars. We're going to be continuing this discussion, and then we've got other good content that we're going through, like how much income to maximize contributions, solo 401k deep dives, etc. Right, but that doesn't impact your obligation to pay Medicare and Social Security. For a real estate agent that collects commission, do I need to generate a W-2 to be able to contribute? Not necessarily. So you need to have earned self-employment compensation, which could be W-2 wages from a business taxed as an S corp, or it could be income that's reported on Schedule C of your 1040, right? So a lot of times, if you are receiving a real estate commission, you might receive a 1099 NEC in your name, which then would require that income to be reported on Schedule C, which is earned income. Now, for purposes of determining how much you can contribute, one would need to take their net earned income on Schedule C less 1/2 of the self-employment tax, specifically line 31 of Schedule C less 1/2 of the self-employment tax. And that amount is considered to be self-employment compensation upon which one can determine how much they can contribute. So for example, they're able to contribute 100% of that amount up to $23,000 as an employee contribution for 2024, plus another $7,500 if they're 50 or older, 20% of that amount as an employer, et cetera, et cetera. Hopefully that helps and makes sense. Does a real estate agent require a W-2? So not necessarily, like we just talked about. Thank you so much. I think we just answered that good question. Let's see here. I have a solo Roth IRA through a trust company who is the owner of a single manager managed LLC for which I'm the manager. How is yours different? I think you're referring to the IRA LLC product, which is of course different than the solo 401k, but that structure is totally consistent with our IRA LLC product, which is the industry norm. Oh, thank you so much for the great feedback. And I'm so sorry to be going around in this. I would suggest that if you could email business@mysolo401k.net with your exact scenario, and then maybe we can set up a time to go through it. Thank you so much for the participation, though. All right. Well, hopefully we got to everyone's question. And again, thank you so much for the good participation. Until next time, stay tuned. Thank you. Oh, we got one person that sneaked in at the end. So if you go to mysolo401k.net and then click on open account, and then you can click on solo 401k. I'm also going to chat over a link to our solo 401k account opening page.